Listen, is there any more room for the Bears to get squeezed? YouTube. What it do? It's Little Petty checking in with you guys with another stock market episode. And in today's episode, you guys, we got a nice episode. And in today's episode, we are going to talk about overall the stock market, but we're going to talk about how I made $600 this week selling credit spreads on Tesla stock. Yes, that is the video today. But as you guys all know, in my videos, what we like to do first is talk about the stock market. Let's see where we're at on the charts. Now, as you guys can clearly see, the stock market has been ripping. The bear's face is off. We are up. We're coming back up towards, this is the 3-month, one day chart. And as you can see, we have basically blown past all these resistance that I had talked about, saying that SPY is approaching 312. If you guys don't believe me, go back, look at my videos in the go back 2 months, look at my videos. I've been talking about the stock market is going to go higher. So, without further ado, let's go ahead and get into the charts. Let's talk about the charts. Let's look at the market watch and see what's going on in the overall stock market and what happened today. Today was 1,000% option Friday. Did you make 1,000% option Friday? Let me know in the comments below. So as you guys can see, everything was basically green on the day. Everything was basically bullish. There was basically nothing that pulled back. And that's all we're just gonna stick with that. We don't even need to get into anything. As you guys can see right here, we even had an uptick in the volume. And right now we are blowing past these tops. We have a gap up here to fill. Nope, we don't have a gap to fill. So yeah, basically we have another range up here to come up and test this 333. I'm not sure if we're going to get up there as soon as that, but the volume spike is there and the stock market is overall bullish. We have been buying call options and stocks all the way down, and now we are up basically 50% on all of our positions. So that is the spill for the overall stock market. The stock market is going higher. Let's look at the NASDAQ. The NASDAQ just hit all-time highs. So there you go. For all the bears that are still shorting the market, keep shorting it, I guess. You know, you'll be right one day, but you guys missed this whole run up. But that's not what this video is about. This video is about selling options on Tesla stock. So let's go ahead and look into it, and we're going to show you guys on the Tastyworks account. Boom. So we're going to break all of this down into this video, and we're going to talk about how we are selling options for income, and we're taking advantage of the premium, the time decay, and the short-term contracts to profit with our technical analysis. So that is how we are generating the income, and we're going to break all that stuff down in this lesson. So let me pull out my notes, and as you guys can see right here, so we got the range, and we're going to pull up the calendar real quick. So if you guys can see, last week was May 28th, and this is where we started off our week to sell to get the income of the $600. So on Thursday, May 28th, that's where we're going to start out, and you can see right here. So this is the credit that we received, and these are the options that we sold. So we'll go to the options table, and what we did was we sold the 785 and the 780 strikes. Now we're going to go look at the chart first on Tesla. So on the 28th, 27th, 28th, this is where the stock was at right here. The stock was trading right here. One more candle over. Right there. Boom. So the stock was trading right here on this candle right here. Now we're looking at it, okay, the stock looks pretty much bullish overall. We don't short the market when the stocks are holding a strong uptrend. This is a 1226, so it's riding up the 12 EMA. So we're like, okay, we're going to sell anything below here to collect. And now the ones that we were looking at were the we sold the 785s and the 780s. That was the first sell. So the stock was trading at 800. So as long as we were looking at these pivots right here, and overall this low pivot right here, this wick candle. So we sold contracts under this wick candle for the June 5th. So let's go back to the options. So right here. And we'll go to the option table and show you guys how we set this up. So we sold the 785 and the 780s. You guys see the wick candle that we were using as our low. Okay, cool. We have a wick. So this is a pivot area. We expect that the stock is going to go higher. And as you guys can see, the stock did go higher. So we ended up selling that on Thursday. We got a credit of $155. So when we set up the play, we'll go to the June 5th. We sold the 785s and we bought the 780s. Now when the stock was trading at $800, these contracts, the credit that we were able to receive was $155. So we took on the trade, and the reason that we took on the trade is we like to sell these. I like to do these plays to get the premium crush over the weekend, and we'll talk about that more in this video. So we ended up selling the 785 and we bought the 780. Now the max of your risk is going to be the width, which is $5. So it's $500. Let's pull out the calculator. So $500 minus $155 for the credit that we received. Our max risk is $345. Now, if you guys didn't know, follow my YouTube channel. Links in the description. I'm posting my plays. And yeah, so that's not the play. We're going to talk about that later. And also, we got a Discord chat. So if you guys are interested in dropping in the Discord chat, let me know. The people in my chat, we are making money. So if you want to make money, I would recommend you get into the chat. If you want to join the chat, drop a comment, say I want to join your chat, and I will consider adding you into my chat. It is currently free right now. So back to the strategy. So we ended up selling that, and we collected the 155. So over the weekend, so that we sold that on Thursday. Now let's go to the chart. We sold that on Thursday on this candle. The next day the stock went up to $834. So what we did the next day, let's go to the activity. We ended up selling another one. So what we did was we sold one closer because I'm looking at it like, okay, the stock is bullish. We can probably pivot up above this range. We've came up to this range and we have been testing it. So what happened was we ended up selling an 835 and an 830. So we sold one closer. And when you sell closer, so let me go back to the right here. So right here, we sold the 835 and the 830. So this was on the 29th on Friday. And what we were saying is the way we were going into this trade was, okay, cool. We have about close to 500 or we have close to $400 of credit of cash that we will be able to collect is if Tesla stock keeps this uptrend. So we ended up selling the 835 and the 830. We collected the $251 of collateral, which is your premium, going into the weekend. So boom. Now over the weekend, what happened? Tesla stock gapped up. So we're like, great. So on Monday we ended up closing out the 785s right here. We closed out the 785s, and what we did was we closed those out, and what we ended up closing them out for $25. So we collected the 155, I'm breaking this down right now, but once we get into more of these, I'm gonna run through it. I'm just breaking it down so you guys can understand. So the 785, the ones that we had sold, and collected the 155. So the 155, we ended up giving them back for 25 cents, so $25. So minus 25, we collected a total profit of $130. So that was our first move that we did on Monday. Over the weekend, the stock gapped up. These contracts crashed. So we took our profit. We gave the $25. There's really no reason to hold unless if you have a lot of more capital where you can just keep buying the contracts. But in this case, it's get the money back and reset another play. So that's what we did. And remember that we had sold the 2 contracts. So the 830s, 835s, and the 830s, when the stock gapped up, it gapped up to 859, and then that whole day it went up to almost $900. So on that day, Monday, we closed out the 835s for 110. So we had collected the 250 and we gave back the 110, so we made a total profit of 140. So we made 140 plus 130 over the weekend. So we made $270 over the weekend selling the premium. And that we could have walked away. We hit our $250 goal for the week, and we could have been good. But being a little bit more aggressive, we said, okay, well, we're gonna keep playing these contracts, these short-term contracts. So on Monday, after we sold out, we reloaded. We ended up selling the 865s and the 860s. So now if you come over here, we ended up selling these on Monday, and we collected $217. So we ended up selling closer. And the reason we were selling closer is because the contracts, as the days go on, the contracts start getting cheaper and the risk is not going to be as efficient. So let me show you, for instance. So like, say for instance, if we were going to sell these over the weekend, we would be able to collect the $262. But if the stock comes down, our max risk is $238. But the farther that you go out, you can see you're going to collect less and your risk is more, but you have a better chance of winning because the stock is farther out of what contract that you're selling. So we closed out the 110, we closed out the 835 and the 830s. So we closed out these. After we closed out the so we talked about that. So then the next one that we sold was the 865. Now we sold the 865 on Monday, and we collected $217. And then on Tuesday, we ended up selling the 875. So as the stock kept going up, we sold another one. Now these ones were a little bit more risky, but we still ended up selling them, and we collected the $214 and the $213. Now these are swing trades. I'm looking at it saying the premium is going to come down. Options usually expire worthless unless they fall into the money. And we had a situation today where my contracts are in the money, they came out of the money, and we closed out for 100% profit this week in trading this. So this system works, man, I'm telling you. So we ended up closing, so we sold the 865 and the 870s on Tuesday, and then on Wednesday we ended up closing out both of those contracts. So we sold out. We gave the contracts back for $89 and $162. So we're gonna do this. We're gonna put both those contracts together. 217 plus 213. That's the credit that we received. We gave the contracts back for $89 and $162. So we walked away with $179 profit from the 1st to the 3rd, from Monday to Wednesday. So that tacked on the other profits from that one. And then what did we do after that? Later on in that same day, we sold more contracts. So we sold the 880s and the 875s. So you can see we closed out at 852 and we bought back in at 911 that same day. We sold contracts up one leg up higher. Now, this was the last contract that we ended up buying for the rest of the week. So let's talk about that. So we ended up selling. Where are we at? Closed out. So we ended up selling the 880 and the 875s. So back to the activity. So look, we ended up selling those on, what day did we sell those on? On the 3rd. So the stock was trading at here. Now, let me zoom in, because now as we're getting closer into this time. So as you can see, this is actually a good lesson right here. So the stock was trading at our contracts where the stock needs to close above 880. So the stock was trading on this day. We sold them on the 3rd. Now the 4th, the stock was going up. I was thinking about closing the contracts out, but I'm like, nah, let me just kind of hold out. And what happened, the stock came down. It tapped this level, this support level, and it bounced up. And I'm like, all right, well, you know what? And then what happened was the stock crashed. Boom. So it hit a low of 850 going into the next day. So the next day, the stock had to close above this red line, this 880, for me to be profitable on this trade. So what happened was, boom, the stock gapped up in the morning. I was prepared to take the $300 loss on this trade if it was to close below expiration. But as you can see, what happened was today, this is what happened with the stock today. So it came up, it tapped this, then it set a low. I seen this wick. I said, okay, we'll see what happens. It was a slow grind. Came up and tapped this 880 again, and it came back down. Now the contract is you will be profitable as long as the stock closes above 880. Now, if it closes in between here, this contract, the 875, is going to be out of the money, and this 880 is going to be in the money. You do not want to hold these contracts at expiration if they are not basically out of the money. So any chance that you have to close out the contracts while they're out of the money and you have a profit, that is the best thing to do. Because if you get exercised, say if you get exercised like this, it's gonna mess your account up, dude. Because this contract, you're selling this leg and this one fell out, so it's just a messy situation, especially for small accounts. So if the contract is out of the money on expiration day, you want to close out. So what did we do? We waited for the stock to make a move. So as we can see, boom, the stock tapped down. Right around here, I was down about $200, $300 on the contracts, and I almost thought about selling out. And then I'm like, nope. I remember I've seen this so many times. You got this lower high, comes up, you got another lower high. It's just a slow process. And we did get some bullish activity, but what threw me off was, if you look at yesterday, so Tesla stock has been running up. Yesterday it went down, but if you look at the stock market was just ripping up. So I'm like, dude, what's really going on? You know what I'm saying? But it's all right. So back to over here, the activities. So what we ended up doing, and if you stayed till this long, make sure you guys like the comment. Make sure you guys like this video. This is a lot of information in here. So we ended up selling those 1880s. We got the $200, and then today we ended up closing them out at 1148. Boom. So we sold these out an hour before the close. So as a stock, let's go back to the Tesla chart real quick. So as Tesla stock towards the end of the day, when it ramped up, so at 1140, so in this candle right here is when we got out. We said we're getting out. There's no need to hold, because if the stock comes crashing down, which I've seen happen before, right at the close, then this contract's going to fall in the money. This one's going to be out of the money. So we ended up closing it out. We gave the contracts back for $58. So 206 minus 58 is $148 profit. And that's how we ended the week. And to reload, so that's how we ended the week. That's how we made the $600 profit. Now, we're going to continue with the strategy. So as the strategy works, if you guys don't know, follow my Twitter. I'm dropping the plays. We set up the put credit spread for the weekend premium crush. And I love these setups. These setups are very profitable. The only way you're going to lose on these setups is if the stock market just drops if the stock market has a huge gap down. And that doesn't happen majority of the time. Then people anticipate it, but it takes a long time. If you look at the stock market, how many times have these bears been getting squeezed? I got squeezed probably twice out of this whole run up. I bought puts right here, talked about it, and I bought puts. And I bought puts like up here at 300 and left it alone. There's no reason to be trying to short this. You're gonna get squeezed. Unless you are a good scalp trader, you could do small, but as of a long-term trader, a swing trader, you're gonna get squeezed. So, but let's talk about the play. We ended up selling at 855 and at 850, and we received a credit of 146. So the way this works is, if you want to sell, say you want to sell, like I said early in the video, if you want to sell closer up, you're going to get more of the money. But if you come look at the chart, and we always like to set these up according to the charts. So Tesla, this is what I'm looking at. I'm going to show you guys what I'm looking at and how I set this trade up. Boom. Okay. So there's a gap below right here on Tesla. As long as we hold above this gap, which is at 853, I'm going to be profitable if these contracts expire worthless. So say for instance, and look, this is a clear bull flag. It's holding above this candle. Now, if we do crack below, okay, we'll reset. At the end of the day, we're going to take a small loss. It's not going to be a big loss, but that's really the power of selling the put credit spreads. So we're selling contracts that are out of the money. We're taking a high probability trade. So for instance, if you wanted to sell this 875, you would collect this $208. Your max risk would be 298 or 292. And if you add those two together, that will equal 500. If you striking them out, now you got a $10 spread. So it's going to be $1,000, $1,500. You get the picture? So say for instance, we wanted to sell at the low of the gap, which would be 835. So we wanted to sell the 835. We would be able to collect basically almost $100. So this is a scalable. So as the account grows, we're going to be taking on, you'll be able to sell about 5. You'll be able to collect the $500. The risk is $2,000. Or if you're really strong about it, like for instance what I sold, you can collect the 155 right now, and you could sell 5 of them. You can collect the $700, and you're risking $1,700. So that's basically how you set up these trades, and that's how you collect premium selling short-term options. So that is it for this video. Like I said, make sure you guys like, share, comment, and subscribe. This is a 23-minute video. I tried to wrap it up as soon as I could, and I thank everybody that watched to the very end. And Little Petty, it's